You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Servati.
Welcome to another edition of the Big Cast. My name is Glenn Servati on behalf of the Best Innovation Group, where we like to do cool things with financial technology, and we are back with our annual tradition for the Thanksgiving holiday of an episode with our good friends Ann Legg and John Janklius, along with John Best and myself, about what we're grateful for from the world of financial services, credit unions, payments, and all that kind of stuff. So just another way to kind of help put things back in perspective in our crazy times. John and Ann, what we were just discussing, we're not even sure. We've been doing this at least 5 years, right?
It is something to look forward to at the end of the year, right? And I have a journal, and I start crafting things in the first part of November, right? Knowing that we're going to be here, and I need to start thinking about that. So it's a good reflective process.
Yeah, and then we usually go back and also do the top stories of the year and also the predictions, which will also be presumably coming up over the course of the next couple of months. So, John, why don't you go ahead while you've got the mic? Why don't you introduce yourself for those?
So John Janklius, president of Nimbus QSO, and as we said, this is a kind of a regular occurrence for us. So it's glad to be here, Glenn and Ann and John.
And Ann dialing in from the United Kingdom today, but normally on the West Coast. So you've got a 6 hour or 8 hour swing, right?
So it is officially evening, and pip pip cheerio to all my good friends out here who may be listening. No, I will not do this broadcast British accent. And everybody. Yes, I'm out here. Founder of Thrive. Obviously, as many of you know, we help credit unions take all that gorgeous data and figure out how they're going to drive growth, intelligence, efficiency, and empowerment. So happy to be here. This is exciting. I always love this podcast.
And unfortunately, John Best had a late breaking conflict, so he's not able to join us, but we are going to be patching in his things that he's grateful for after the three of us have this conversation. So you'll be hearing John as well. Let's just get into it. Ann, why don't you kick us off, since you're already like a couple beers into the evening. So why don't you get us started?
I could be from a pub, but I chose not to. But it was tempting. You know, it would be absolutely remiss. So I'm just going to take the white elephant that has been around for the last year and a half, and I'm going to say it's AI. But I want to be clear about why I'm thankful for AI.
Oh, yes, that's a great one. And you know, JB would be right with you if he was here.
I know. So I'm sort of like almost teasing up whatever he's going to say. But the point I want to land on AI, specifically in credit unions, is the way that we are now able to obviously improve the members' lives, because we can do so many things in the back office, which, and I'm being real clear, we're not losing people. We are enhancing what we can do with what we have. And I think this is going to be an incredible opportunity for credit unions. And we've seen it already. I mean, credit unions that now can take, 500 to 600 standard operating procedures and put them into a natural language and let the frontline person be able to answer in natural language and query and respond and provide service to a level of excellence that they've never been able to do before. I mean, this just talk about blowing away, kind of the field. But I think the other part about this is it is now getting us to really think about the tools and the abilities to do, of course, personalization, figuring out how to, again, truly beget scale. I mean, I think that's one of the things credit unions have always been trying to figure out. Well, how do we scale with what we have? This is an amazing, and can be an amazing technology that truly doesn't have that much of a price point for credit unions to engage.
And I know you and I were just talking about that out of the Innovation Club just a couple of weeks ago. There was, I wish I could remember his name and the company he was with, but one of the people that had one of those takeaway quotes that I jotted down when I was at Money 2020 the week before that was, is AI transformational or is it overhyped? And his answer was yes, which I think is absolutely true. But he's like, it's absolutely going to, I personally, it may not have been the same person, but somebody else said, we're at a stage right now where I think AI still needs a human in the loop. Whether it always will is up for debate, but I think right now it does. But last week, just most recently, I was at Venture Tech, and some of the solutions, exactly like you're talking about, both customer facing and back office rationalizing, there's all kinds of things in the works, and you got to believe in, John, I'm sure with Nimbus as well, you're seeing the same thing.
Oh, we are with our clients, and part of our conversation is, and how important it is to have the data that feeds these models, right? And the advantages that if you can do it in real time rather than kind of a lag to it. And so,
Right.
we come from, Glenn, with real-time cloud native core, that we're beginning to have more and more conversations about the advantages of that your stack is in real time if you're going to use these kind of models, particularly when you're doing customer facing kind of work with it. And that what a huge advantage that is. So kind of another layer of requirement or thinking as you're architecting your tech stack, the flowing of that data and the importance of that.
So I got John Best here now, and John, Ann had mentioned AI as one of the things that she's thankful for, and I know you give that a lot of thought. She is happy that it gives us more opportunity to improve members' lives, and that we're actually thinking of data more as an asset now, and kind of fueling the models. Any thoughts around those lines? I figure that's probably someplace on your list as well.
Yeah, it certainly is. I mean, I am incredibly thankful for AI this year. It's answered so many questions. I was thinking about all the silly questions that it's answered for me. Here's one I thought that was interesting. That when we were, I think, out somewhere, I rented a car, and it was a Toyota Prius, and it was an HEV model. I didn't pick it, for those of you who are worked up about EVs or whatever, but and it has on the gear shift a B, a capital B.
A B.
And you know what I thought it was for? I thought it was for backup, because
Okay.
Why not, right? But but it wasn't. There was an R in there too, and I got it figured out. It's an R. But then I still didn't know what the B was for. I couldn't help myself, so I asked ChatGPT, and it said that the B is for when you go down a hill, and you need the brake. Like you don't want to kill your brakes, so you want to use the engine to slow you down, so you don't overheat your brake pads. And then at the end of it, it said you can learn a lot more by using the manual. So basically, ChatGPT told me to RTFM. For those of you that don't know what that means, it means read the freaking manual. You
I
can
like
replace freaking with what you want. But no, I'm super impressed with what's going on. Although I'm thankful that this year we didn't have AI attempt to take over the planet or kill anyone. We didn't have any AI incidents that I can think of. Remember the year before, all the crazy stuff of AI creating precedents that people,
leaving your wife and fall in love with it, things like that.
Yeah, hallucinations and all that. We really didn't have any of that this year. This year was mostly productive. But if you talk to people, you'll hear, well, the promise of it is, it was supposed to do all these things. And I think it's far more transparent than people think. I think everything in the world, because of AI, is moving faster. Everything. I think, and it's quickly taking off, just like anything else. It's getting more and more use. But I'm thankful that there were no AI disasters. Although, I don't know if you saw, but Sam Altman, I think last week or maybe earlier this week, depending on when you're listening to this, he predicted a GI, artificial general intelligence, by I want to say January of next year. So
really? I missed that.
Buckle in, folks, because Sam, he's the kind of guy that would know that sort of thing, right? So yeah, buckle in.
I'll dig out
the
reference to that and add it to the show notes. I don't recall that one. Wow.
Yeah, look it up. He just was sitting for an interview with the Y Combinator CEO, who is his successor, obviously, because he started Y Combinator. And he asked him, and he shocked everybody by saying, "Oh no, I think January 2025." So there you go.
And is that still a relevant kind of benchmark? I seem to recall that when we hit AGI, that it's supposed to trigger something around OpenAI turning over some of its licenses. So it's kind of interesting.
That's a great point. I don't know. That sounds like an episode to me. We should talk about that. Maybe that's a December episode. Yeah, I'm not sure.
Or a prediction for 2025, and it really gets interesting.
Yeah.
100%. Just a quick, I guess, add on to that. Yeah. How this is now driving, which I do love, is driving credit unions to think about their data as this robust asset. They already knew it for analytics, but wow, this can be, if you think about it, as a fueling source for an incredible amount of models. I mean, it really allows a credit union to say, this is my use case, this is my data, this is now my strategy. And like you said, this is how it fits into my tech stack. And it really kind of gives a 1-4 punch, which I think in prior times we kept talking about this, well, there's all this data out there, but now it really crystallizes in the use case and in that action that can be taken.
And are you The folks who did the good hard work of getting all their data organized and governed, that, hey, you know what, now they're a leg up and ahead on using it for these different models for sure.
Huge. And what's interesting is they're now at the point where they're like, yes, now we are really ready to go. Plus, they'll have not only the infrastructure of the governance, but they've already been thinking about policy. And one of the creating things that I think Credence have been doing awesome is they look at their existing policy, look at how security, and then they're literally saying, this is an add-on. I don't have to redo the entire policy. I can add in because this is truly a tool. And when you see the Credence who realize it is a tool, and again, as we're saying, it's a way that's sort of a pull through of many different pieces, it's very powerful, and you can see them just leap.
I'm also thinking that just again, the collaboration superpower of credit unions, you don't want to be polluting your models with dodgy information or things that maybe you don't have the intellectual property rights to. But taking some kind of a syndicated approach to popular, and one of the companies that I saw at Venture Tech was doing exactly that in terms of pooling the data from the credit union population, and obviously taking out the personal identifiable information and creating an even more robust database.
Exactly. Exactly. So yes, very thankful for that.
So John, what's first on your list?
Oh God, first on my list, I think it's the timeliness of our news on the election. And my take on it is I'm grateful for that there was such a mandate. And I'm not making it a statement about either Republican or Democrat, but just that it wasn't like, contested, argued over. It was a clear mandate. And then, House, Senate, White House, you can even think about the Supreme Court. So there's a mandate there to go get some work done. And I think that's good for the country. I like that. And it's clear. And if you're a business person, there's some business advantages with the mandate that comes to that. So that I think those all bode well for credit unions. But I think it bodes well for the country that it's such a clear mandate saying, let's move on. Let's get to work.
And Anne, I know you and I were out again at the Innovation Club. Was immediately after the election. And frankly, I was dreading traveling that week. I had kind of carved out on my calendar. It's like there is going to be this incredible lack of clarity and no one's going to be able to focus on anything else. And it turned out not to be the case. So I, frankly, found it refreshing to be there and actually diving into something and just kind of getting my mind back into work. So from that standpoint,
I think that the ability that we were able to have clarity quickly was one of those pieces that I was equally concerned. And same thing, I was a bit dreading. I was doing quite a bit of travel that week, and I thought, oh goodness, this could be interesting. And it wasn't an event. And I had a lot of gratitude that it wasn't an event.
Yeah. And we had a candidate that actually conceded. Wasn't that refreshing? There's my skidding toward the edge of the political landscape. Soft landing is the first one. I know I talked about this last year. I predicted that I thought we would probably see one. And despite the noise about the economy that obviously played a pretty significant role in the election cycle, I don't know how you characterize this as anything other than a soft landing. I mean, unemployment is not shot up. Inflation is down. GDP continues. I mean, as early, and I think we even talked about this as recently, I forget when the last time we were all four on the same podcast, but by definition, if you take the traditional definition of a recession as 2 consecutive quarters of no growth or declines, well, we haven't had any. So it was pretty much a definition that we were not going to have a recession by the end of June, because by then we knew you couldn't have 2 consecutive quarters. So, again, there's a road ahead. It doesn't mean that there aren't, difficulties and pains out there. But, and to your point, John, I think the market has already shown that the clarity that's come out of the election results has definitely driven us, back to the point that we can kind of, get back to as one of actually an elected official says here, the business of America, which is business.
Well, and that point, we actually saw the Fed respond with the rate. So
literally the day after, right?
Yes. So it is interesting to be like, and here we are. So yes, I really do feel like it's one of those where we felt like we were coming in hot. We braked it, but we didn't get off the road. We skidded gently and just kept going.
I mean, the last time I can remember anything like this, and again, it kind of may have fallen in that same category, was when the first George Bush wound up losing his reelection bid. And that was the time that they officially coined that phrase. It's the economy, stupid. And in hindsight, the economy had pretty much turned around by the election, but the memory of the economy that was a little bit more rocky before that became the problem.
And Glenn, I was just listening to some bank reporting on a slowing, if not a stopping, of the increase in delinquency across almost every asset class.
Really?
From
I
credit
had not
cards
seen
to
that.
cars, the home equities. Yeah, we just saw it yesterday, and I was like, okay, that's encouraging. It's not final, but some of the early data is starting to show we may be peaking on that. So, more to your soft landing.
And again, something else that one of my old bosses used to say, 1 point does not make a trend, but it can reverse another trend. So that's wonderful news.
I'm thankful for the progression in technology that I think has stemmed the wave of cybercrime and cyber scams that could possibly have happened. So I'm very happy that it seems to me, and I point at guys like Illuma Labs, who very early on said, okay, we know deep fakes is an option. I remember talking to Melinda about this in 2018, and he could have easily said, yeah, but you're going to have to be a sophisticated hacker to do this. And I said, I just don't think so. And he was right on board with that. And as a result, his products and many others have the ability to detect these things. Otherwise, I think the onslaught of fraud and cyber scheming, you can write that down. That's a new word, cyber scheming, would have been far worse. It's not great now, but I think it could have been far worse than what we have seen. And I worry about what AGI will do for that, honestly. And I could speak to that, but I think that's an episode as well. But I was explaining it the other day that, once AGI hits, it now has the ability to reason, which changes the game in a way that is, to me, it's prolific for hackers, but it's also prolific for normal users. I'm thankful for.
Let me ask on that one. Let me just follow up a bit more. It's kind of, you're flipping the script a bit, as Ann said earlier, in that a lot of people are concerned about the fact that fraud attempts are up. You're saying we ought to be grateful that they're not up even further, because they could be.
Yes, yeah, I think it could have been far worse. I think that we have to be careful because that other shoe hasn't dropped yet, in my opinion.
Cool. I think, and I know this is kind of a funky thing because it did have a little bit of a slow burn, but in the slow burn category, real-time payments.
Yeah, okay.
And here's where I'm going with that. We have been waiting for FedNow and all of that to really take on, and it started. And the beauty of that now is that allows us to start speeding up other activity in the whole payments realm. And I know, Glenn, you will probably speak to that in much more depth, but I kind of thought to myself, it did happen. And it wasn't that it's going to happen and maybe 3 people have done it. It is moving along and it is picking up cadence. And I'm thankful that that has started, because that just felt like that loomed for so long. So it's nice to know that, in my opinion, I think maybe it could have been gone a little faster, but it's moving. So I'm grateful that it's moving.
You might be able to draw an election kind of analogy to that one too, because when you'd had RTP in market and FedNow coming, you had this lack of clarity. And now that they're both there, you can say, okay, let's get on with it.
Right, exactly. Okay, everybody get on board. Let's all bicycle in the same direction. Let's do it.
John, is that another one that I would think Nimbus probably sees some of that, because people are always talking about, okay, how does that integrate with our abilities within our core systems and things like that?
Yeah, more and more in the RFPs that's coming up is the attention to, can you help us with real-time payments and those requirements? So, from my perspective, it's kind of fun to watch those scorecards that used to be, 2,100 questions, right, in an RFP for that more and more we're getting down to some really substantive differences in some of the cores that are out there, right? And again, that helps with clarity too, right? If we know where we're going, what the requirements are, in order to be competitive, then that's really helping in like the selection process too, right? That kind of clarity again is like, that's super, super helpful. Yep.
The big kind of benchmark that I think that the Fed hit, as I believe they now have 1,000 financial institutions active. Now, the major asterisk on that one is the vast majority of them are still in receive only mode. which
Right.
is still a challenge. But you got to walk before you run. But to me, I think I'm still waiting for the killer app, because we've got the, as I've been saying for some time, we've had the plumbing set on this, and neither the clearinghouse or the Fed wanted to say, okay, this is the product you shall use. They're saying this is the infrastructure. Innovators, have at it. Figure out how you want to use it. And the talk of embedded payments continues to get stronger and stronger. And even if it's not literally part of that exact definition, I think that most of embedded payments usually kind of implies instant payments. So as that happens, I'm sure at some point it'll come from some direction that we're not all waiting for, and knowing that that's going to be the answer. It's going to be something that kind of catches us off guard, a Venmo or PayPal type moment that really takes it to the next level.
Exactly. And I just feel like now we're at that landscape that those can happen. And that's what I am just excited about and thankful for.
Yeah.
Yeah.
John, next on your list?
Yeah, I guess it's a continuation from last year. Remember, we talked about funding for fintechs, that it got a little tougher, and we said actually that's probably a good thing, right? That instead of just being focused on, do you have top line growth, do you have bottom line growth too? And so in the last year and a half, we've really watched fintechs have to kind of make that come true and make some choices and have some discipline on becoming going concerns, if you want to call it that, rather than just top line growth. And so you've watched that just kind of work through the system, and those who were able to go out and secure their next round, whether it was C or D, round, and that's just been a good shakeout. It's been healthy. I'm involved with 2 fintechs, and that permeates our conversations, right? Is balancing the growth of today, but also the discipline of having that good, double bottom line, and that's healthy. That's good and stabilizing for credit unions. That's been added to the mix as a requirement of what good looks like. And so we've had a year and a half of working on it. It's been good. Yeah.
And what I like is, and Glenn, I'm excited to hear what your perspective is, especially from venture tech. I feel like there is now clarity in what's being offered. Before it would be like, we do this, we do that, we do this. It's like, this is the business problem that you have, credit union, and this is how we solve it. I feel like there's a lot more crystallization in the offerings, the problems, the use cases. Maybe
I agree with you. And probably kind of a subset of that is what the expectation is. It's like, we're not just chasing the revenue, we're chasing a sustainable business model. And I think people have gotten that message too.
Right.
Yeah. And to your point, maybe that's part of the narrowing that you're seeing, right? That hyper focusing. If you do have to arrive at a bottom line and be disciplined, and you have to make some choices, right? Yeah. So get tighter on your value proposition. That's good.
Yeah, I've always, and I think I may have said this last year too, I've never fully, yes, fintech funding was down, but the degree to which people acted like it froze, I thought was always somewhat overstated. Because if you look at the numbers, if you looked at anything beyond a 3-year trend, we had one absolutely insanely high year and a pretty darn great one the year before that too. So obviously you're going to come down off those highs at some point, especially as the economy slows down. We're really no worse than we were back before those 2 really, really crazy years. So it's not like they just totally dried up.
No,
and deal flow's back up again, right? Deal flow is back open again as far as exits. Those are starting to happen.
And again, speaking to the election, we're seeing that and the one that I keep looking at now is Capital One Discover, where Capital One stock, or I'm sorry, Discover stock went up 20% the day after the election, which is a pretty strong indicator of what people think is going to happen as far as approval of that deal.
No, and again, it's the fact that I feel like the fintechs that we see specifically in the credit space have become, again, more focused because there is more competition, and also the fact that they have to be able to say, this is what you get and this is what your return will be.
Yeah. You think we can predict right now what one of John's is going to be, which is the price of Bitcoin? Because I've already heard him gloating about his prediction. It looks like he's pretty darn accurate.
Yeah, no, so we will hear that. That's a given.
Let's leave this in here so we can just say that we predicted John's prediction.
Completely.
So we got a kick out of your background in terms of predictions, which we'll get into on our year-end episode too. But I've got to believe you're thankful for Bitcoin too.
Very thankful for Bitcoin. Yeah, it took off just like I thought it would. As a matter of fact, I remember you guys all making fun of me, and I particularly remember you laughing directly at
I
me.
don't remember
And
laughing, but if the
I felt,
camera
I
was
felt,
on, you might have
I
seen an eye
particularly,
roll.
I remember being shamed. That's what I remember mostly. And so I actually ratcheted down my prediction because of the shame, even though I've been right the past 2 years. And so, I went with a prediction. I think it's a little less than where it hit, and I did say it was an election year. I remember that,
Yes, you did.
and I thought that every time there's an election year, I think that Bitcoin is the equivalent of stuffing money in your mattress. That's what I think, or digging holes in the backyard and putting it back there. So you could say you heard it first here.
It's a shame you succumbed to peer pressure, but
Well, I'm like that. I was bullied in high school. Now I'm bullied on my own podcast. But I do what I can.
the podcast host bullied in high school Venn diagram must be an interesting.
Yeah, it's a circle. I'm right there. That's me, right in the middle of that.
Go ahead, sorry.
Go ahead.
I was going to say, and this is also kind of a feeding, because I think I said something relatively similar next year. I'm going to kind of change it around a little bit. I'm grateful for youth, not my youth, because that's past tense, but just the new crop of entrepreneurs that are out there. And again, I keep mentioning Venture Tech because I thought it was an amazing conference this year. And one of the things that I saw was a crop of companies, and I've been seeing this quite a bit, who don't necessarily have that same kind of expectation that, yes, I'm going to just, clear my throat and declare that I've got a startup and just wait for the VC money to start rolling in. And it hasn't deterred them. And there was a deep roster of very young and I shouldn't say very young, but younger and very, very talented people with some really cool ideas, many of which were AI focused and taking very interesting twists on that. So I really feel good about the direction we're heading in terms of where the pipeline's at.
Maybe you can lend a data point on this, because to me, it feels like some of the new, and they're definitely, I'm going to just say, fresher entrepreneurs are picking these really cool passion projects that they say, this is a point, underserved members. How do we do this? How do we go into some of these areas where credit unions may not have had the precision, either in tools or in strategy, to get into, which is also living their mission. So I feel like we're seeing a slight shift. That's my vibe. So
I agree with you. And whether that's because the pot of gold isn't quite as visible at the end of the rainbow, so why not do something that you really care about? I'm not really sure, but I definitely, in fact, a couple of the real winners at Venture Tech, I think definitely fell into that category. I've been hearing lots of those personal stories where people can say, this is why this issue is important to me. And it's very compelling.
Yeah.
You know what else is up too? And this is kind of in the theme of the innovation and new ideas and striking out with a very focused way to do things, is we're getting more calls now on de novos that are coming up, getting their charters, getting going. We see an uptick in it from where we sit. And so that's encouraging too, right? There's still folks saying, I see a market, it's underserved, I want to go get it. The tools that are available to me now are amazing, right? And able to do it. And we're seeing just an uptick over last year. I'd say like double the amount we saw last year.
It's funny that you say that, because I ran into somebody else who was attending Venture Tech who had that exact same conversation with me, that they're in the process. I guess I forget what the different phases are. They kind of made it through the first checkpoint with the NCUA and are on to phase 2. And I know Becky Reed down in Texas, she's working on one of her own as well. So, and I know our friend Denise Wymore has been really pounding that drum for some time, trying to find a way, as she likes to say, it's like, well, if credit unions are going to keep merging, you've got to fill the pipeline at the top, or else the number can only go in one direction. So I'm glad to hear you say that, John, because I wasn't sure that it was really showing up literally in the numbers, but it sounds like it is.
Yeah, and we're also seeing too that some of these are really backed by either large credit unions or large foundations, so they have a pocketbook, to help that ambition go. And so it's like that feels different too.
When you say backed by credit unions, are they kind of almost like little mini tuck unders, or is just that they're kind of as a philanthropy helping somebody else get going?
It's somebody wanting to sponsor a good idea, but it's not really kind of in their wheelhouse or their field of membership, and so they're thinking, maybe we'll have to strike out and help to make that good idea happen, right? The idea is its time has come. We can see a path to do it. The customer base is clear. The solution sets that are needed are clear. like somebody's got to do this. And so we want to step up and make it happen.
And again, this is another one of those just really wonderful things about the credit union movement is that somebody else says, hey, that person is kind of a competitor, but I'm going to help them get going. I mean, it happens in small business too. There's always a helping hand in the industry, but I think we're particularly good at that.
I agree. I feel like that kind of dovetails into something that maybe not everybody agrees with me, so it'll be interesting to see what you two think. But I've kind of been waiting around open banking. And I feel like open banking clearly has made much more headlines this year.
Oh yeah.
But I think that the piece that I am thankful for is that in a way, it now allows a credit union to say, hey, this doesn't mean that this means we go away. It means we could be stronger and better.
Yes. I've been thinking, I mean, for so long, people have had this is being done to us,
Right.
as opposed to this should be done by us and with us, because there's things to gain too.
Right. And I think, as they like to say, flipping the script, I think it is a very flip the script moment for the industry. And I also feel that it is absolutely powerful because if you don't know and can't see that full landscape, then you're really making some decisions that may not be the best or the strongest. And maybe that could be frightening, but that could also be so powerful. So I guess I'm all in that team. This is fascinating. There's a lot of information. There is a lot of very good competition that could be used in a strategic advantage for us that I think we could.
And again, this is something at the Innovation Club that we spend some time speaking about. And one of my cautions is according to the letter of the law, any credit union with less than $850 million in assets need not participate.
Right.
I do not at all think that means you can just disregard it, because you're going to look like a dinosaur very quickly if you just kind of ignore it entirely. And that's another one, John. I would think that must show up on Nimbus's radar in terms of the way people are thinking about their processing.
Yeah, I mean, for sure. Kind of going back to, when you think about what is your base technology and that whole stack, if it's real time and that data is available and it's easily harvested, that's a big deal. You think about how complicated some of the old architecture is. And if you want to, play in this space, that's really limiting if that's your tool set that you're going to be using. Yeah.
I'm not sure I can call it grateful, but that not 594-page report the CFPB put out, which at this point, I think I can actually say that I have pretty much read it, which is kind of disturbing. I guess I'm grateful because it moved the meter forward, like you said, Ann. But on the other hand, it left an awful lot of unanswered questions, and I'm not sure I see exactly how they're going to be answered. And that's another one of those where if you assume that, I think it's a safe assumption, there's going to be a change at the top of the house at the CFPB. Hard to imagine that this winds up going away. It may get somehow tweaked,
Right.
but hopefully we at least kind of get some clarity on some of those kind of pieces around the edges.
Which brings me back to the point that this is happening. This isn't a
Yeah,
this is. And so because I just feel like the conversation for a long time has been, oh, it will happen. But there has not been this is our time point. And I feel like this has been the time point. And with that is where credit unions need to step in and go, okay, what am I doing with it?
Yeah.
I'm excited about, I think Ann mentioned this, open banking. I actually think that we can turn that into a positive.
I do too.
If we approach it the right way, we're proactive about it. I think open banking could be the unicorn product that everybody's been searching for since the time I joined this industry. Do you know what it's called? The Switch Kit. That's right. The magical, mystical, unicorn that no one's ever really seen, and lots of people, say they have it, but it's always sort of been hindered by the ability for the other side's either bureaucracy or their, just willingness to negate it, to sort of walk away from it. But now there is a real chance that it could level the playing field, I think, for credit unions. And I think that's very powerful.
It's a great point. I mean, if and I think I've said this before too, but if we are as credit unions as good as we say we are, or we believe we are, then we ought to be, and outside of marketing dollars that prevents us from really getting that message out fully, then we should not be afraid of competing on, and this in theory lowers the barriers to entry, which creates some fintech competition, but also presumably levels the playing field with regard to the larger institutions.
But just think of the number of paradigm breaks we're talking about here, right? That, it's a bad thing. It's happening to us. No, now it's happening for us, right? And we're going to do something and use it as an advantage. Another paradigm break this year that I'm thankful for is the merger of First Tech and DCU, right? It used to be that mergers took place, under $1 billion. Those were the ones where that was going to happen. And now look at two really large, sophisticated, well-run, well-led credit unions are coming together to get the scale and be able to provide even more value at that level. I love that break in paradigm. I think it's fantastic.
When you talk about the paradigm, it just reminds me, going way back in time, the other one is, it wasn't that long ago. I don't know how many years you want to go back, 5, 6, that, fintechs were the sworn enemy, the mortal enemy. They were just out to get our lunch. And at this point, they're more friend than foe. I think there's still co-opetition, but I think the emphasis is on the co-op side.
Yeah.
I would say frenemy. They are solid frenemy.
Yeah.
Yeah. Well, and you're investing in them too, right?
Absolutely. To the tune of what? I think up to like 250 million at this point from our friends over at Circle.
Yeah, and they have their second fund that's open, and you have another example in the Reseda Group, and you have all kinds of examples of credit unions make direct investments without going through a fund. That's happening more and more. So, hey, good on us.
That's a good. I hadn't really thought about that, but I'm going to throw that in there. Things to be grateful for is something like Reseda Group. I mean, that is really forward-thinking stuff. The way they're approaching, innovation, and I know they've struck a whole lot of really cool partnerships with a lot of these companies, and and it really helps get a lot of them off the ground and gives them a proof of concept. So hats off to MSU FCU on that.
Yeah, and that push too is beyond just investment returns and in the companies that they also are going to use to run their mission, is they're setting it up to where it's available to other credit unions right now. Hey, we know you need this. We'll do proof of concept. We'll make the initial investment. We'll bring the solutions that you need in a more just another channel, another way. So hey, good on them.
Yeah, I mean, Circle, the premise is, we're funding these good ideas and kind of giving them a seal of approval, and then presumably and hopefully a whole bunch of the investing companies will wind up using them, but there's no requirement. Yeah, that's an even more direct process with MSU FCU. It's like, why would they do it if they didn't feel it was worthy of their own shop?
Right. It's funny because that really led me into, and I was trying to figure out how to connect all these dots, and I came up with, I'm seeing this lovely emerging technology leadership in the industry, whether it's Reseda, whether it's Circle, but we're seeing more of a technology leadership. And it's not in a reactionary position, it's in a proactive position. And I love how, and again, like I was trying to crystallize this, and I'm like, I'm just going to leave it in that little nugget.
No, I like that.
But very thankful for that technology leadership and that the vision, and also to the ability to take risk.
And I think I've said this before, but I mean, kind of a byproduct of that is at places like Finovate, where the focus has shifted so much to credit unions to the point that you've now got the awareness among these fintechs that it used to be kind of like, yes, and if a bank wants to talk to us, and you'd know, okay, they mean bank or credit union. So then they'd start to say, if a bank or credit union wants to, and literally this time they got to the point where they were saying, if a credit union or bank wants to talk to us, they really recognize that this is a great way to hit the market in a more rapid fashion.
The other evolution we're seeing is a lot of credit union executives are now going to work at fintechs, right? Not just sitting on the boards of being investors. They're actually working in them to help them, find a way and make the connection, in the marketplace. That's what I'm doing. That's my passion project, right? Is we need more of us to go to work in fintechs and, collapse those timelines on what is understood and what good looks like, what a good partnership is, what do we really need to drive our mission. So I think we're going to see more of that coming.
That sounds absolutely. That would be a big win if we continue to see that move.
I'm thankful for Apple Intelligence and the way Apple has not Apple Intelligence as in the intelligence of the executives at Apple, although I'm sure the two relate. But and Apple Intelligence maybe isn't what I'm thinking of here, but I'm thankful for the way Apple has approached the market with regard to AI.
And let me play therapist here. Please say more.
Yeah. So, Apple could have easily just said, we're going to develop our own. and we're going to get moving on it. And they certainly have. I'm certain as much money as they have and who they are, there's something out there they're working on. But it seems to me that their approach is to give. They're looking at it as give consumers a choice type of approach. Right now it supports ChatGPT. From what I've read, it could support other pieces. Anthropic has really been coming on lately with their Claude product, and I'm grateful that Microsoft got a quantum product out the door.
You're thankful for Apple and Microsoft this year. That's a landmark.
I am thankful for both of them. Yes, I'm also very thankful for NVIDIA, but for very different reasons.
Yeah.
But yeah, I think that much like AI, quantum, especially for fintechs and the financial industry, is going to be incredibly important. Now, up until now, we've been talking about it as a threat, as a platform that will threaten our encryption, and that's absolutely true. We often overlook what will be its incredible capability to optimize finances. Because if you think about it, finances are really just a big giant puzzle to figure out, like how many payments do I make and how much do I spend here, and if you just think of personal finances, but then you extrapolate that out to the entire industry, or well, let's just go into one large financial institution. There's never been a classical computing system that could possibly, think about this, optimize a financial institution. You know how you optimize your hard drive? You know how that works, right?
I'm overdue, but yes, I do know how it works.
That's what we're going to be able to do for financial institutions with quantum. Now, what Microsoft released recently, will that do that? We're still learning. We tried to do a project with it in the Innovation Club, and then we did not succeed. But guess what? That's what innovation is all about.
I was about to say, if you don't ever fail at the Innovation Club, you're not innovating enough.
You were not innovating. We failed pretty good. We thought we had something, but what we learned from it was a lot. So I'm thankful that Microsoft continues to push those limits. So I was glad that they took the opportunity to get that out the door and get it in people's hands.
Absolutely. But most importantly, I am thankful for you all, because it is always such a joy to gather here and talk about what we're talking about. And I am thankful for that. So I'd love to end on that.
And hopefully we'll get a chance to do it again for a year-end episode and a kickoff of 2025 episode.
That would be great. And I hope things go well for you and your family there, and safe travels.
Appreciate it. Thank you.
Glad to see you as always.
If people want to get in touch, John, Nimbus, the best way to do it?
Yeah, absolutely. Yep. Nimbus.com. Look for John under the leadership team. Yep.
John.Janklius, or what's the email?
It's J Janklius.
J Janklius. And Ann?
J Janklius at Nimbus.com.
You can find everything you need to know, I hope, at AnnLegThrive.com. And of course, that's Ann at AnnLegThrive.com. So
and the Ann has an E, I believe, right?
Because, hey, I'm in England, so it's Ann with an E. That's English. Look how I tied that all together.
Well, happy Thanksgiving to everybody else who is listening. Thanks so much for always joining us. We, as you can have to imagine, we are very, very thankful for our audience and the fact that you stick with us through these. You can always find out more about the Best Innovation Group at big-fintech.com. I'm Glenn Servati. You can find me at 154 Advisors. Track me down on LinkedIn. Happy Thanksgiving to everybody. And I'm not even sure we're going to take a week off this time. So we should have new content here on the Big Cast probably next Tuesday, because we got just too much going on. We can't wait to talk to you again.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.